Hi everyone, it's Stuart here again. It's Tuesday, the 5th of August. I've got the 6th on there, haven't I? It's here we are. It's PMI day today. There we are, Tuesday, the 5th of August. And they've been relatively positive this morning. You can see here the Japanese and the Chinese data this morning, private readings in both those countries, the Abu Jin Bank and the case in China. Both better than expected. China 52.6 compared to a 50.6, or a whole 0.2 or to full 2 points better than expected. Just a scrape better than expected in Japan. However, 51.7 last time, so it's all moving in the right direction. Hot for the 10-year auction on the Japanese government bonds this morning as well, 1.642 compared to 144.2. So the bond market continues to remain very hot in the Japan. In Europe, the composite numbers slipped a tad, not massively, but a tad. It's fortunately going in the wrong direction. The only bright spot was, or the two bright spots was, Spain continues to outperform at 55.1, and surprised Germany. So we've seen this sort of across the board better data coming out of Germany. So 50.6, just a bit into the expansion zone at 50.6 from 49.7 last time, but again, it's 0.9 of 1 point higher, so it's going in the right direction, and overall relatively positive. Although just very weakly over that to expand into that expansion zone here for the services sector. Finally, a bit of positive news out of the UK. Both the composite and the services number, 51.8, worse than last month, but better than expected, which is finally a little bit of positive news for the Chancellor and the Prime Minister at the moment. But still, 51.8, it's better than, as it says there, better than expected. But even at 53, it's not massive, it's not great, but it was, seems to be going in the right direction. We've turned backwards, but not as negatively as many thought. So that's the data thus far. We've just had or we should have had the S&P, the Standards & Poor's PMI data. It's more, the ISM is much more significant. I don't know why that hasn't updated. Let me just refresh that. Let's look at today. I just want to do today. Oh, I did lose my filters. It's too much nonsense on there. There we are. Look at the S&P number. So yeah, there we go. See, the US continues to lead the way, 55.7 for the services number from 52.9. That'll be great news for the White House. 51.5 for the composite from 52.9. So it's a significant beat of expectations with the S&P. We'll see what the ISM looks like in 10 minutes or so, but as you can see, it's still leading the pack compared to Europe and Asia from the Purchasing Managers Index. Remember, these guys are important, or this index is important, because they are forward-looking. They are what's happening in the future. So the US ramping up and moving forward again. So we'll come back to the calendar in a wee while on the data coming out. So let's have a quick look at the markets. Yesterday, we were down on the day. This is the Nasdaq on the 1 hour time frame. So it was trending down day yesterday, which is easy to trade as a trend following trade. I haven't actually been in the markets much. I haven't posted much on our Discord group over the last few days. I haven't actually got any active open positions, to be honest, on those the trade locker, the prop trade positions. So, but I'll getting back into that possibly tonight. We'll let you know later on. So, and I need to update how we did for July. July was another positive month, so we've had a really good 2025 so far. So as far as the markets was concerned, the tech market was down. We are in August. It's got a bad reputation, really, August. I mean, overall, it does okay. It does, it's not that unusual. It's just some of the volatility can be a bit strange due to low volumes and not big, as I said earlier in the week, not many big senior managers making major investment decisions or position decisions, but narrow ranges for forex pairs in particular. But overall it does okay most August. It's just the reversal can be quite volatile sometimes. But anyway, I mean, yesterday is a good example of that. We trended lower and we've recovered today here on the Nasdaq. But if you just take this back up to the daily time frame, the dip lower we saw last week has bought back here yesterday, and we are down a bit today as we go forward. So that is that the hour? Was that the hourly chart? That doesn't look right, does it? Because we were down yesterday and up today. Is that? Hang on a minute. Let me just check that looks a bit nefarious. There we are. So that was yesterday's. Oh no, sorry. So that's this is sorry. It was the hourly time frame, but this was last week, wasn't it? What am I talking about? This was last week. Monday started here. I don't know why I thought that was the beginning of the. I don't know why that should be here for the beginning of the week is what I'd put on the other markets. I must put it in the wrong place or something. But anyway, there's the beginning of the week. There's the bounce back yesterday, the green chart. So we were down Friday on non-farm payroll, and then up yesterday. Just ignore all that rubbish I've just said before. Let's just check everything is working okay. Mary had a little lamp. Looks like it. Yeah. I say I've got some upgrades to the hardware coming, and some cables. I've done some testing. It looks okay. So these pictures will improve hopefully, and the audio will improve over the next couple of days as well. But so anyway, keep watching for that, my friends. Stocks back up today. So again, trending day Friday, exacerbated by obviously the non-farm payroll. Better day yesterday, and we sort of stopped out so far today. But the cash market is just opened in the US, and we're up across the board. Last time I had a quick scan, so a quick look. Yeah, we were all opening in the green, marginally so. The Nasdaq's up 0.3 of 1%. The S&P is up 0.2 of 1%. And the Dow is up. Well, Dow's flat really. It's just around about where it's opened. We've had some good results this morning. Pfizer beat most of the big companies reporting have beat expectations. The caveat, the outlier, is Caterpillar. If I just pull this up, this is a free tool, everyone. Earnings Whispers, just cluttered with adverts. That's the only thing. The free version. Caterpillar is the only outlier here. You can see the only red 3% surprise, a miss for earnings coming in at $4.72 compared to $4.88, and revenue was better at 16.5 billion compared to 16.35 billion. So shares underperformed for Caterpillar, the major engineering company. As you can see, there's green across that board for the big hitters: Pfizer, Galaxy Digital, BP, Duke Energy, all doing better than expected. Later tonight, we've got AMD, AMEG. So if you flip to the after the market closes list here, you can see AMD, Supermicro, NT, Snap reporting as well tonight. So well into the second half of the S&P 500, so we're close to 60% of the companies reported, and we're still at 80%, nearly 84% plus beating expectations. So it's a strong quarter, as many expected, and all-time highs cannot be ruled out again for the stock markets. I would continue to advocate. So if we look at we look at the daily time frame, the dip under the 20-day moving average, we said on Friday, was bought back significantly yesterday. So as last time, under and then back up. Here under for, well, I said that's we bought the last time we were in a downtrend, so it was the break above up. When it broke up above, and then it took us 3 days later we were back over the 50. So we haven't been in to test the 50-day moving average yet either, so we could see a test of that before we move to all-time highs. But again, the trend remains set. Don't get shaken out too much or re-enter yesterday, as many would have done on that positive close. See how the candles closed above the open on Friday, so positive Monday, and we're sort of in the green today. The Dow, let's just look at them all. The Dow is weaker. The Nasdaq's the strongest of the three. The Nasdaq's moved, the Dow and the S&P have moved sort of not as lower than the S&P, than the Nasdaq. Sorry. So the Dow, the 30 industrial companies, similar pattern, but we've moved below the 20 and then into the 50. So the 50 is much more of a support area for the Dow. You see a flatter move, so it's less of a move, much more less prone to the in interest rate changes or expectations for interest rates than the tech-heavy Nasdaq, the Dow. So the Dow's pushed under the 20 into the 50. Now it's bounced back to the 20. So this is looking weaker. We'd like to see this back over the 20 and looking and a close up here somewhere over this week to show that we are breaking back up above the 20. If not, we could come back to test the 50 and then into 43,000 and 42,000 downside. That's our downside zone for the Dow. In the short term, a break of this 20 area needs to be significant. So we need to see like a big body of the candle above the 20-day moving average for us to move higher to test new all-time highs for the Dow. As far as the S&P 500 is concerned, 500 companies here are much more representative of the US economy than either the Nasdaq or the Dow. Pattern similar under the 20 on Friday with that big shocking non-farm payroll announcement. Bounce back Monday, again closing above our open on Friday, so that's relatively positive, although it's very sort of marginal. But we are now above our 20-day, so that's still, although we're down on the day, I can read that, we are still above the 20 period moving average there at the key 6,300 level. There's 6,200. And there's a 50-day at 6,150. So there your down zone supports for the S&P 500. And again, many are looking for new all-time highs during August for the S&P 500. But also on the flip side of that, a number of analysts I've been reading are talking about it needs perhaps a bigger shakeout, perhaps not as violent as we had into the April Liberation Day announcement, but once all the tariff noise has gone away or been clarified, there may be some more movement to the upside, or conversely, obviously, there may be some movement to the downside. You know, never try and prejudge what's going to happen. Never predict. Always react. Looked like we were going short on Friday. That had closed out any long positions we'd have had on the indexes, and we're back today. It's too early to tell. That's just a one-day pivot down, or is it a turnaround? As I said, far too early to tell, but we are back up there on the US markets. Across the Atlantic in the UK, in fact, let's go to the calendar because the data will have come out. Now we are 3, so is the ISM going to support what we've seen on the Standard & Poor's here? Let's just update the calendar. Tuesday. In fact, it hasn't. It's disappointed, hasn't it? It's more or less in line, 50.1 for the headline. So it's actually worse than expected. So the Standard & Poor's looked like we were going to feed through to the ISM. The ISM key number here, the July number, 50.1 from 50.8 last time. So it's down, but more significantly, it's down 1.4 from where it was expected to be. Prices have continued to move up, 69.9 from 67.5. So that adds to this argument about the stickiness of inflation, which the Fed have stuck with. And employment, 46 points. That's worse than expected. Business activity, 2 points worse than expected, or 1.6 worse than expected. And a whole point worse for new orders for July. So that's a bit disappointing compared to the what we'd seen from the Standard & Poor's PMI data. This tends to be more significant, the ISM. Let's have a quick look. We'll come back to the indexes. Let's have a quick look how that's affected the dollar, the euro. Let's drill down to the response in these short time frames, the 5-minute response. Well, we've been very much sideways yesterday, non-trading sort of environment. Initially down on the better than expected S&P numbers, euro, dollar, but lifted, euro lifted, dollar weaker on the more significant ISM numbers, but still you can see on this 5-minute chart, it's just looping around. That's a non-tradable zone range as far as I'm concerned. I suppose we could have blown it out, but that's just bit too complicated that for me on that 5-minute time frame. If we look at the higher time frame, the hourly time frame, you see what I'm talking about. It's nothing happening yesterday. We've drifted lower in the Asian session and through Europe, but it's nothing to get too excited about. I suppose, well, having said that, it's been under its 20-hour moving average, excuse me. Let's do that all day, but it's not a massive move, but it's drifted lower, then under 15, down. So that's the main data of the day, and there you can see that. I'll zoom that in. You can see, hopefully you can see the price for the euro dollar today doesn't really want to go below 115.36.6 there. You can see that 1, 2, 3, 4, 5, 6, 7, 8 hours we've been stuck there. That's your support. So, if we're down here, we could either go back up or short, but we're still short on that, I suppose. But that volatility, as we flattened out, might have taken you out. So if you'd gone short with this strategy here at 3 o'clock this morning on the conclusion of that candle, drifted your stop loss down as you've moved lower. Say at this point here, 9 o'clock, and your stop loss was here, you'd have been it hasn't really gone much lower, so you'd have been probably taken out on the volatility of the last hour and certainly this hour for a very small, well, not small gain, but a relative gain from 115.63 to about 115.47. Yeah, so maybe 15, 18 pips in that minor move, and then nothing really to get your teeth into on euro here today. So I say not a lot of data moving things. It has actually moved the stock markets into the red. The Dow and the S&P have now turned negative from a positive start after in the first 30 minutes. Nasdaq is holding on to gains, but those ISM numbers have brought the stocks down and hit the dollar as well. So let's just go through the rest of the majors. So Aussie 64.65 this morning, again sideways action. I'm out of these. There's nothing here to get too excited about in this first week of August. I'm going to hang on to my for better options. I'm going to hang on to my powder, keep it dry, as they say. Sorry, I'm just trying to find my trading platform. It's not going on. It's not coming up on this platform. I'll have to use on a different station, see what's going on. Yeah, there's nothing looking to trigger tonight. There was a couple of things last night, and nothing really. Perhaps the FTSE's looking a bit interesting on the faster. There's a potential long at 9,160, so I'll have a look at that later on. So yeah, nothing here on the euro, on the dollar moves. That's what I was looking at before, and that other 4 on the other side. There's the beginning of the week on Sunday night here. So Aussie was up a bit. Oh, that's because we were trading the Swiss franc, weren't we, on the open yesterday in the short time, but ran into, that's our resistance for the rest of the week, really. 64.84 there for the Australian dollar, and today we've been lower highs and lower lows, trending low under the 50-hour moving average, back over the cross of the 20 under the 50. That's negative. We've looped up, so that's looking potentially weak. Aussie, but again, it's very, very minor moves, so not a lot of action here on the Forex market so far this week. Canadian dollar, same pattern here. Interesting, pivoting around a target area we had at 37.75 on last trades, capped at 138 still, so sideways here this week so far, and crisscrossing 50 and 20. 20's moved over the 50 here, so it's relatively positive, but the floor forming here. So perhaps we can see a move up through this, back to this, well, I've got a stop loss mark there at 38.40. Then this recent high when we went to 38.75 on Friday, ahead of the payrolls data for the Canadian dollar. The Swiss franc, the dollar recovery continues. If we look at the daily time frame, or had continued last week, I should say. And then we shook out obviously on Friday, but it's continues this week basically. So that was the spike low on Friday from this nice move up we'd seen to a high of 81.45. So that remains our upside target, 81.45. Let's put that up there. If we can get over .81 to 81.45 is upside target. So into the 20-day, bounced off it yesterday, and we're up a tad today, but we may stalling to close above 81. We've only done that. See what we've done? We've done that one day positively, one day negatively, and then we've been back under it. So dollar coming back against the Swiss franc, but stalling at .81. The yen 147.50 this morning. There's Friday's shakeout, as we saw. So the recovery of the dollar very, very much stalled, and there's the flat running 20-day moving average at 147.55, which is where we sit exactly now. So again, another one directionless here on these daily time frames. And if we look at we go down to the hourly time frames, you can see what's going on there again. So flat day yesterday, rounding bottom, which is nothing to get too excited about. What we have moved over the 20-hour moving average, but very small candles there this morning, and moved up and ran out of steam on the ISM data. So this looks, if this breaks here, we could be moving back down into it, the 147 area, and possibly below. Obviously, for the yen today. Sorry, I'm just saying that's let's make that a solid line because it's around number there we are, 147. For yen, Kiwi 58.95. So pivoting around .59 again. I'm not going to spend too much time on that because there's not a lot going on. The euro, usually the most liquid, and it still is the most liquid. There's no question about that, but again, a bit boring, nothing really going on, not a lot of pips available there. 115 has been held since the big miss for non-farm payrolls on Friday. The high we got to was 115.50. That's what you want to be looking to the upside, and a break of 115 to the downside. If this is going to move any further this week, as the PMI data continues to roll out, we've got the Bank of England later on this week, and sterling is performing just like the other majors. So it's really a stalling of the recovery in the dollar, really, is what we've seen on the back of that jobs numbers. The equity markets rallied yesterday, sort of shaking that off a bit, but the dollar remains subdued in this rally or this recovery it's seen. So it's given some of the gains that it had last week ahead of the non-farm, which looked to be just continuing to move down. There's the shock of the surprise. Markets hit shocks. We had this big up tick for cable, as with all the other dollar crosses, and we're just holding on to those gains. Basically, is the story of what this is showing us. Did it Monday? Did it so far today? There's not a lot of data to move it. The main data, say, is what's just come out now, the PMI's data, but dollar remains sort of stalled in its recovery against the majors. So let's use the sterling, demonstrate the point yet again. There's a recovery for the dollar as sterling cable fell quite significantly. big uptick on Friday from the 114 area, so these higher time frames. Sorry, 114. I'm talking about you on it. 132. But you know, it followed our move down through 134, 135, 134 into 132 as we suggested we may do last week. And so what happens now? Well, we're a little directionless. We could remain in this channel. A break of the that a fib level there, which sits here, needs to happen, and the 20-day is still up there at 134. So 134 is the upside break, and 132 is support here for cable. So that's where we sit so far for August. Going forward, so earnings have done very good, didn't we? So we looked at indexes. Let's have a look at gold. Gold 3372. So it's come back. The continual recovery is still in play. So there's the floor we went to under the key 3,300 level. Last week we went to that 3270 levels, as we keep saying. So that's our $30 support zone here, and we came back on Friday as the dollar weakened. Looks awful, doesn't it? Oh, this isn't. Sizing's gone a bit squiffy. And again today it's a bit more exaggerated than the forex markets. So there's Friday, there's Monday. We moved high. We got as high as 3,385. And then we've been down from that since, and we're at 3,372 now. So another potential $12 to the upside to push new highs for the week if this move higher now is continuing, which found a floor at 3,350, unsurprisingly, where the support is. So going forward for the rest of the day in this week, 3,350, 3,350 is a key support area if we're going to hold the gains from the weakness of the non-farm payroll data. Basically, is what this is telling us so far, and this is our first test into it today. But to move higher, we need to break 3,385 this week going forward. And if we just tick this up to the 4-hour time frame, you see that a bit more blocky, and that 3,370, and there's the 3,385 top. The 4-hour chart. So moving higher, obviously the big 3,300 is the major support area, which looked like it had given way into the jobs data on Friday. So it looks like it's running out of steam a wee bit there. Cryptos, Bitcoin, 113,750 today. I don't know how to paddle on that. So again, held the decline. Sorry, it's the wrong. That's gold. You fool. Wrong asset. Don't want to try. Don't want the bots. What am I doing? Oh. Right, sorry about that. What I want is Bitcoin, not gold. There we are. So the decline into 112,000 we saw over the weekend has been bought up yesterday and on Saturday. It's been bought up on Sunday and yesterday, but we've rolled over. So a rolling top here in the 4-hour time frame. If you look at the daily time frame, that move, a bit like we said with the cable into the key 132 area, we have been into test 112 to 11200, but again, that's where our 50-day moving average sits, and that's where the support was found over the weekend. So we were up on Sunday, up a tad yesterday, not as much. Sunday's move, obviously more volumes yesterday than perhaps on Sunday, and then down again today. So a break higher over the 20-day moving average is required for this to start to move back up to challenge not only this resistance area here through 120,000, but the all-time high at 123,000. If we remain capped by the 20-day moving average for any longer than this 1, 2, 3, 4, 5, 6-day move, you know, the pressure is to the downside 112 into this cluster area here through say 107, 106 zone, and then into the 100,000 level. They're the downside moves potentially of this extending move. Equally, we could find support, as I said, at 112,000, which is looking okay at the moment. And we consolidate sideways through here, a narrow channel for a while. But you know, volatility is not far away from Bitcoin ever, is it? So see what happens where we move from there. But overall, this divergence has played out. We are now really converging as we've sort of going down in line with our oscillators. So 112 is the big support pivot area now. A flip of that takes us into the 100,000, 106, 105,000 ranges to the downside for Bitcoin. Excuse me. So there we go. That's, I say, it's a relatively quiet week, even with the 1 hour, as you can see. There's not a lot going on for the rest of the day. So Tuesday, the main data was this surprise, and it was a bit of a surprise miss for the non-manufacturing PMIs, or the services PMIs in non-America speak. We see there. So there we are for Tuesday. Let me just leave you with, well, there's not a lot going on really. I'd not like to leave with gold or the euro or some other setup, but let me just check my trading platform for potential trades tonight. Not a lot, to be honest. I had my my Achilles heel and the FTSE, interestingly. So and also the Hong Kong. We don't offer the Hong Kong here, do we, on our indices? Pretty sure we do. It's not on our indices list, is it? Hong Kong 33. No. Excuse me. So let's have a look at FTSE. Why my little system on the day? Oh, there we go. It's strong. Yesterday's strong day. So it's playing catch up. So you can see there's so it's a 1, 2, 3, 4, 5, 6, 7. That's the dip. So that's 7, 6, 7, 8. Yeah. So potentially, say I might be a small position. I might open on that later on, long the FTSE around about this. My trading platform is a bit different to the one we got here. It's quoting me 91.55 as opposed to 91.31 here on the Trade Locker platform here. Last twice it's proved positive, so I'll have a look at that later on, see if it's still in play. And I say the only other one that's potential for later on at the moment is the pound CAD, but that's dropped out now, so that's need to refresh my scanner. That doesn't seem to be in play any longer. No, so I don't know what's going on with that one. So there we go, trying to do stuff live. 4-hour strategies. Euro went this morning, interestingly. The 4-hour time frame was short on the euro. It's not actually showing up here as a change. Aussie Swiss was a potential. That's not that again. That's out of right. That's my trading platform needs a restart, I think, because it's not making sense to me when I'm just scanning that live here with you guys. Okay, there we go. That's Tuesday, my friends. We are the trade, theproptrade.com. We are here to help you. All of us are here to help you. We've got great support, fast response, very fast payouts, no stupid hidden news agendas. So come and join us, give it a go. A few $100 gets you a good sized trading account. Whether you want to do an express 1-step, 1-phase challenge, or a 2-step standard challenge. This is our most popular one. Remember, it's swap free. You can hold stuff over the weekend. There's no silly, you can't, have big trades. We do try and keep you disciplined from a risk point of view. So we don't want you risking more than 3% on any one particular trade idea at any one particular time. The rules for the overall targets and losses are very, very clear. 8% profit target on step 1. Step 2 is 5%. You don't want to be losing more than 10% of your account unless you'll breach the rules. No news trading on the standard account. If you want to trade the news with all its pros and cons, which I've mentioned many times, I'm not a big news trader. I like to fade the news. But if you are, the pro account not only allows you to trade the news, trade the weekends, but it also gives you an added 10% profit share. So you have 90% of any sort of paper fund profit you make in your funded account. Remember, these are all simulated accounts with like paper trading, if you like, or demo accounts. But with real, these are real live equity feeds, real live feeds we've got. They cost an awful lot of money to get into our platform. So when you win, the profits are shared. 90%, we keep 10%. If you've got a standard account, it's 80% and 20%. A $25,000 pro account on this two-step challenge costs $195, so less than $200, gives you $25,000 worth of equity to take all across trades across all the platforms, whether it's indexes, whether it's energies, whether it's forexes. And if you're new to us, you're completely new to us, new 25 still applies, and it gives you a 25% discount on that $195. So for less than $150, $146.25, you get to play or trade with a $25,000 account, and that's like what the good retail traders will have accounts of 25,000, 50,000 accounts to get going with. So you can get that for a mere $146. You're successful. You get through the two stages without breaching the daily loss or the maximum loss. You get to your funded account. You do the same. You get you're not losing more than 10% on the account, not more than 5% a day. 90% of the profits you've made, whether it's $1,000, $2,000, $10,000, 90% of that is yours to withdraw within 7 days. All payments are done on a Friday. That's all, as long as you put your request in by midnight East European Standard Time. 5 o'clock East European Standard Time on the Thursday. You get paid on the Friday. If you miss that time, it'll be the following Friday, and your refund now comes on the second payout. It used to be the third payout. We brought it back to the first payout, and now we're changing it from 1st of August to the second payout. But once you're funded, it's up to you where you go from there. You build your account, you can scale your account as well. So we're here to help you, my friends. And any questions, get on our website, theproptrade.com. But also, if you want some live chat, also on there. But also, if you've not got Discord, it's obviously, I know it's a gamer's little app, but it's really interactive. It's really quick. Get on here, and the team are very, very responsive, led by Johnson and Thompson and Katzen. Here we are, Katzen, Johnson. There you see the red guys in red. Very, very responsive to any questions all of our guys have, and obviously a lot of people, we get the same questions a lot, but that's understandable. But we are, what you see is what you get. We are pros. We've been around a long time, and we're here to help you. Okay, so take care. I'll see you all again tomorrow, and in the meantime, trade carefully. Not a lot going on movement wise, but just I'm saying that Trump could say something, couldn't he? I know he had a speech due today. I don't know what time that was, but anyway, take care, everyone. See you all again tomorrow. All the best.